In this video, I'll discuss Q1 FY26 result and Concall of PNB Housing Finance. So it is a housing finance company, we all know that. But the main point about this company is that they have entered affordable housing finance segment in 2 years back, and they are transforming their business from a prime housing finance to a affordable housing finance. Because the management is saying that, like, if I talk about that AUM mix, then the emerging market segment plus the affordable housing finance segment constitute around 25% of their business, and the management is saying that by FY27 they will increase these two segment to around 40% of the AUM. So the prime segment, which is around 75% of their whole AUM now, is going to be around 60% of their whole AUM, and that is why the company is turning around. Because if we look at the margins in the affordable housing finance segment, it is higher than the prime housing finance. Okay, so that is why the company is turning around from a bad company to a good company. So that is the point. In terms of geography, it is PNB Housing Finance is present across the country. So in terms of geography, they are fairly diversified. So let's talk about the result and the Concall of Q1 FY26. In this quarter Q1 FY26, they grew their retail AUM by 18%, okay, year on year. And if I talk about their segment wise AUM growth, then in affordable they grew their book by 143% year on year. Because it is a really small book, I think it is around 5,000 of the whole book, if I am not wrong. 6,000 crore size book it is. In terms of the emerging market segment, they grew that book by 20% year on year. In terms of the prime, they grew their book by 10% in this quarter year on year. So affordable housing finance is growing rapidly in their business, and yeah, the margins are better. Emerging market segment also have a better margin, I think it is 50-60 bps better than prime housing finance. So that is the thing. So that is why the whole business is changing. In terms of the affordable housing finance guidance, the management is guiding for a 9500 crore book by FY26, which is around 87% growth year on year, which is like pretty big. So that is another point. And overall they are looking for a growth of 16 to 18% going forward. Okay, so that is the thing with the AUM growth. In terms of the disbursement, they grew their disbursement by 15%, and the growth in disbursement has been good for last few quarters, so no complaint about that. In terms of the segment wise disbursement, affordable housing finance grew by 30% in this quarter, and emerging market also grew by 32% in this quarter, whereas the prime grew by only 1%. So they are slowing down the prime disbursement for last few quarters, and they are looking to disburse more in the affordable segment and the emerging market segment. So that is the point with disbursement. In terms of the GNPA, if we look at their GNPA has been improving for last several quarters. Like in Q3 FY25, their GNPA was at the level of 1.73%. Okay, and in this quarter the GNPA is at 1.06%. So they have been consistently improving their GNPA quarter after quarter. So that is a really good point they are doing. in terms of and the guidance also is for a 1% GNPA going forward. Okay, so that is the point. In terms of their if we look at their, just a point, yeah, if we look at their affordable segment GNPA, then if you can see that the GNPA is increasing and have been increasing for last few quarters. Like in Q1 FY25 the GNPA was at 0.02%, whereas in this quarter the GNPA is at 0.33%. So if you do not understand that what is going on, then you would say that this is bad for a company that the GNPA is going up in a segment. But use your common sense that affordable housing finance started this segment 2 years back. So the segment is unmature. Okay, and in an example, like if I take a loan from a bank or a NBFC, I am not going to default on the first month, on the second month. Okay, I might default after 1 year, 2 year, 3 year. So that is the point we have to see, that it is not about that the asset quality is like GNP is increasing and have been increasing for last few quarters. But the thing is that you have to understand why there is the increase. So the increase is because of the maturity of the book. As the book is going to mature, like after 1 year, 2 year, the GNPA number will be far more higher than this level also. And the management is also saying a similar kind of a thing, that going forward by Q2 FY27, the GNPA in affordable housing finance segment is going to be around 0.75% to 0.8%, and in a mid-term, in a longer term, that will peak around 1 to 1.1% level. So that is what I am saying, that as the book is going to mature, the GNPA will be higher. So that is the point. It is not about the GNPA have been increasing for last several quarters, because it is increasing because of the maturity of the book, not because the customers are defaulting. Yeah, customers are obviously defaulting, but as I said in that example, if I take a loan from a bank or a NBFC, I am not going to default in the first month, in the second month, but the default could occur in a longer run, like 1 year, 2 year, 3 year run. So that is what I am trying to say. So overall, as a company, they are guiding us for a 1% GNPA going forward, whereas now it is around 1.06%. So in terms of their credit cost, if we look at their credit cost, that is in a negative territory. Like in this quarter, the credit cost is at minus 27 BPS. Why it is in the negative territory? Because the recovery that is going on in this company is very, very high. So that is why credit cost is in negative, because of the recovery that is going on. So that is the point. And the guidance is that they, in the next 5-6 quarter, they will get a support of recovery. So they are saying that the credit cost is going to be negative for next 5 to 6 quarter, and then after 5 to 6 quarter, in a longer run, like FY28, FY29, the credit cost is going to settle around 25 BPS, I mean 0.25%. So that is the point with credit cost. In terms of the NIM, as I said, the margins in affordable segment is higher than the prime segment, even is higher against the emerging market segment. So the NIM is consistently increasing, and if we look at their guidance also, earlier guidance, they were saying that the NIM will be at 3.6 to 3.65% in FY26, but in this quarter they achieved that number, and the NIM is at 3.75%. so they achieved the NIM guidance earlier, ahead of the guidance. Okay, so that is a really good thing. And going forward in the midterm, like in next 1 and 2 year, they are guiding us for a 4% of NIM. Okay, so that is also good, mainly because of the incremental yield. They are guiding us for an incremental yield of 12 to 12.6% in affordable housing finance segment, whereas now the yield is around 12.1%. so they are looking for a higher yield in the affordable housing finance segment. And the yield in emerging market also, in emerging market segment also, they are expecting a better yield, okay, going forward. So in terms of the portfolio yield, they are expecting a better portfolio yield, and that is how they are saying, and that is why they are saying that NIM will be at around 4% level going forward, whereas now it is around 3.75%. okay, so that is the thing with the NIM, that they are expecting a good kind of increase in terms of the portfolio yield and the NIM. Okay, in terms of the ROE, now they are at a range of like 10% kind of a ROE, and going forward they are guiding us for a 14% ROE by FY28. so ROE is the most important, and I mean, if we have to see a company by one parameter, that where the company is going, then we have to look at the ROE. That if the ROE is going in an upward direction, then the company is also moving in the right direction. But if the ROE is going in a downward direction, then the company is not going in the right direction. In this company, they are guiding for a 4% increase in ROE in next 3 years. So we can say that where the company is going in the right direction. So that is the point with ROA. In terms of PAT also, they grew their PAT by 23% in this quarter, and that is why they got the operating leverage in Q1 FY26, and they are getting operating leverage for last few quarters. So that is also a really good thing. In terms of the whole company, if I talk about the company as all the parameters are moving in the right direction, but there were a problem about the resignation of CEO. The CEO is going to give resignation by I mean, it was October, I think. But what I believe, that I always believe in one thing, that one person does not affect a company very much. Okay, so that is what I believe. If it is a fairly big company, yes, if it was a really small company like 1000 crore of market cap, then the resignation of a management person, that could have a big effect. But if it is a big company like PNB Housing Finance is a pretty big company and pretty reputed company, so I do not think there will be any kind of a problem going forward in terms of the growth, uh, because this kind of things keeps happening. We all know that company to company it is pretty constant. So that is the point I would like to say. But it is all about tracking the business, okay, that we have to keep tracking the business. If the business is going in a right direction, then all is good, but if the business is not going in a, I mean the parameters are not improving, if the parameters are not improving, then the business is not going in a right direction. Whether the CEO resigns, whether the managing director resigns, does not matter. So that is the point I would like to say. But as a overall company, I have to say that the PNB Housing Finance is moving in a right direction. All the parameters they are doing is absolutely going in a right direction. So that is the point I would like to say in PNB Housing Finance. So let's see what happens in the next quarter, how the growth, how the asset quality remains going forward. So that's it for the video. Thanks for watching.